If you can master smart money concepts, you'll be able to make so much more money from trading. This is what I'm going to cover in this course. But if you really want this course to work for you, and if you really want to master smart money concepts, do not skip through any of this video. I'm going to start off by teaching you what is smart money concepts and why you should trade it. Then I'm going to show you how to predict the next move by using liquidity. This is important for determining the right directional bias. Next, I'm going to show you how to trade the right order blocks in fair value gaps, so you can stop losing by trading the wrong order blocks in fair value gaps. And last but not least, I'm going to show you how I personally trade smart money concepts, my own secret smart money concept strategy. So what is smart money concepts? Smart money concepts is basically buying low and selling high. That's it. We want to buy low and sell high just because, like in any business, you want to buy at a discount and sell it at a premium. In trading, you want to trade like the institutions and the big banks and move in the same direction and follow their footprints. I want you to take a look at these candlestick patterns. You'll notice how we aggressively bought off from the low and aggressively sold off from the high. Now, to the left is a swing low. This is when price is at a discount and is going to aggressively buy up. To the right, we have a swing high, and this is typically when price is at a premium and will sell off. So by identifying these swing points on your chart, you'll know when smart money has entered the market. So why should you trade smart money concepts? First off, you want to follow in the footsteps of the big banks and institutions. They have the large funds to move the market. And so following that momentum is going to get you on the right side most of the time. Secondly, you do not want to get caught in the blender with retail money or dumb money and get trapped and stopped out. What I mean is you don't want to get trapped trying to trade a breakout either at the top or the bottom. What you want to do is actually ride that momentum of smart money. To put it simply, you want to go long where dumb money is going short, and you want to go short where dumb money is going long. Now that you understand smart money concepts, let me show you how to actually predict the next market move using liquidity. Now, in order to predict the next move or get the right directional bias, you need to be able to identify liquidity. Liquidity are these highs and lows that left strong rejection wicks. The lows are seen as sell side liquidity, whereas the highs are seen as buy side liquidity. The idea here is that the smart money or big boys will tend to take the market to these price levels just to create liquidity in the market. In order to get the right directional bias, you need to mark out sell side liquidity and buy side liquidity levels. You have to look at these price levels as a magnet to price, where price is attracted to these levels. Let's say you're a single guy and you're on a dating scene. You're going to court the attention of the girls you're most attracted to, right? Let's say you have Megan Fox and Lizzo. You're going to approach Megan Fox, right? Not to say Lizzo is not attractive to some. I'm just saying, bro, the market is going to the price that's most attractive. And when you're on your chart, you have to see where price is most likely going to go next by using simple logic. Looking here, we have buy side and sell side liquidity marked up. Two questions you must always ask yourself. Where has price come from and where's price going? Those two questions frame your setup. You see, you are trying to create a narrative for price action. This might be one of the most overlooked things in trading smart money concepts. To predict the next move with precision, you must be able to answer both of those questions undeniably. It must be so clear even Stevie Wonder could see it. If not, you might be overcomplicating it. It's as simple as price went here first. Right now, price is going here next. Now that you know how to predict the next move using liquidity, let's talk about how you can get great entries using fair value gaps and order blocks. In order for you to frame high probability setups, you must master trading order blocks and fair value gaps. Once you can spot liquidity and you clearly have a bias and you can see where price is most likely going to go next, then you will identify and draw these fair value gaps and order blocks out on your charts. Once price comes into there, that's your entry. Now, not all fair value gaps and order blocks work out. Some are good, some are bad. When I first started trading smart money concepts, I was still losing and blowing accounts because I was looking to trade every single order block and fair value gap that I saw on my charts. It was until I figured out how to choose the right order blocks and fair value gaps to trade. Before, I was trading low probability setups. Then once I discovered the secret to trading order blocks and fair value gaps the right way, I started to only trade the highest probability setups, and that's when my trading took off and I became more consistent and profitable. You want to choose the right order blocks and fair value gaps, the ones with the highest probability of giving an entry and leaving to go to your TP. Now, in order to choose the right ones, you have to look to enter at discount and premium prices. Which brings us back to the basic premise of smart money concepts, in which we want to buy low and sell high. So when going long, you want to trade order blocks and fair value gaps at a discount price. And conversely, when going short, you want to sell an order block or fair value gap at a premium price. This is just a framework of a setup. You will have to create rules to enter and exit trades. But lucky for you, I will share my rule-based trading strategy. My smart money concepts trading strategy is simple and easy for you to take and trade for yourself. Now that you can identify liquidity and find the right order blocks and fair value gaps, you understand how to create a narrative around price action. So the way I frame my setups and take trades is I look specifically for these three things to occur. First, I look for a purge or sweep of liquidity. If I'm bearish, I look for buy side liquidity to be swept first at a premium price. And if I'm bullish, I look for sell side liquidity to be taken first at a discount price. Secondly, I'm looking for a strong candle that leaves either a fair value gap or an order block, sometimes a combination of both. Thirdly, I look for a shift in market structure left by that fair value gap or order block. Now, once all three rules are met, I take an entry when price comes back to that level. Now, none of this is going to work for you unless you truly put in the time to learn how to refine the right order blocks and fair value gaps. Lucky for you, I actually put a video together, so I think you should go ahead and check that out next.